Let's get it, people. Let's get it. Let's get it, man. What's going on? Welcome back to the Ty Trades Futures YouTube channel. Today is the first of the month, June 1st, 2021, man. It's a good week. It should be a lot of things going on. First of all, on Friday, we have the non-farm payrolls number coming out. We always know that is a major trading moment for us. It's a good opportunity for us to take advantage of volatility that's coming into the market. So we don't have too much time. It's 9:24. So let's go ahead and break down our analysis today for US 30, aka the Dow Jones. And of course, we'll look at the futures chart as well, because that's what we'll be trading today. All right, so let's get to it. Looking at US 30, this was the double top that we were talking about last week. I told you guys, as soon as we break back above those levels, the uptrend is back on and it's confirmed. And me and Darren were telling you guys that when you see prices break out from a major resistance level, you always want to wait for prices to come back and retest it. So if this was the breakout area, the retest happened not once right here, but twice. I think if we pull up our support and resistance, we can see that prices bounce right off of the zone. This purple zone represents the breakdown area. We retested that, and so far we've been moving up. So we know that for right now, the trend is up. Now we don't have any major resistance really until we get back up to this top up here. So for the most part, that should give us our direction that we want to look for today. So let's switch over to the Dow Jones futures charts, and then let's also break it down to the smaller time frames. On the 15, we can see that the trend is up. So what are we looking for? We're looking for prices to pull back to what used to be previous highs. So if we can see anything from 34,700, that would probably be the best level to get in. Let's see, check the 5-minute chart. Yeah, with the 5-minute, man, every chart that I've seen looks like the uptrend is just super strong. Now on the 5-minute, we can see a little bit of support down here at 750. So that's a potential level that we could look for too. So far we have 34,700, and then we have 34,750. So we'll have to see what happens when the market first opens, because I've seen occasions where the market just continues to shoot up. I've also seen occasions where the market will just fall back down to lower prices. So we know that overall we are looking for the long trades. Now, of course, we need to make sure that we look at the higher time frames. I started at the lower time frames because I've kind of already looked at it, but you always want to start from the top picture. Now, what we can see from the daily chart is that we have a double bottom that got formed. Remember, when we always see a double bottom, the first thing we look for is a higher low coming out of that double bottom formation. That's exactly what we saw right here on May 27th, down at a price of about 34,100. We had that higher low, and from that point forward, prices have been moving more than likely back up to test the all-time high at 35,000. So let's see if we can hit that number today. I wouldn't be surprised if we do. Let's see, what else do we need to look at? Let's take a look at the weekly, since it is the start of a new week. Now these two candles right here, these two red candles, they gave us a little bit of a scare. I'm not gonna lie. I was thinking that, okay, maybe the uptrend was over and they were pulling back, and they did, and they came right back to test what used to be the previous high, and now they're on their way back up, more than likely to make a new high. So that's why I say we could probably break 35,000. We're only about 250 points away from it right now, so it is possible it could happen today. More than likely it'll happen by the end of the week, hopefully, if the markets continue going up. So with that being said, that kind of covers my analysis for the Dow Jones for right now. We want to look at GU. If it's trending, we'll trade it. Right now, it looks like we're actually coming up into a major supply level area. Oh yeah, so if you can get the short off of 141.88 or maybe 141.90, definitely take that for all my GU traders. Now for me, I won't take it because today I want to focus on the Dow Jones exclusively. So let's go ahead and pull up our charts. I'm using Tradeovate. That's my broker. I'm not here to give any recommendations or anything, but that's just who I use. All right. Got about 30 seconds before this market opens. This was the pound pair. These are the pound futures. When you trade the pound, you can trade it in the forex markets or you can trade it in the futures markets. Most of the major currencies have they have futures contracts that are associated with them. All right, so let's click over to the Dow Jones. Let's auto fit, and it seems like coming off of the open, we're getting a push so far. Market just opened, so let's see if that push continues or if it pulls back a little bit. But the uptrend is nice. We're already up 290 points before the market even opens, so we should definitely be in for a good day today. So far we've seen prices pull back to 34,800. We saw a little bit of support from those levels, but I'm not sure if we should buy right now. At the open, things can be very tricky. It can go one way, then flip back the other, then come back that way, and then go back the other way all over. So you want to make sure you kind of give the market a little bit of time to shake itself out, because this right here is called price discovery. When the market first opens, especially at the beginning of a week and the beginning of a month, all of those things combined, the market likes to figure out which way it wants to move. So right now we're seeing that the buyers are trying to take over and push this thing higher. And so far they've been able to do so. We have a new daily high. Now one thing we don't want to do is go long at higher prices. We want to wait for a pullback. This might be one of those scenarios that we saw on Friday with Darren's trade, where the uptrend is so strong it doesn't give you too many pullback opportunities and you just have to be patient. So I think that actually might be a potential strategy that we could use depending on how this market continues to move. All right, so if we get a bounce off of these wicks, we could definitely look for the long trade. We want to see if this area still holds up as support. So far, it looks like that's what it wants to do. I want to go long right now. I really do. But it's no rush. There's no rush. You want to see how this candle closes before we go long. Let's check the 5-minute. Yeah, honestly, if we get prices to come back to 780, that's when I would start thinking about taking a long trade. On the 1-minute, things are kind of looking a little bit shaky for the buyers right now, because once they pass this level right here at 800 and they broke below it, that told us that the buyers weren't able to hold that level up. Now let's see if they can reclaim that level. But right now, as long as we stay below 800, the sellers are strong in the market. But we know that the overall uptrend is up, so we just have to wait for prices to come back to major support levels. That's it. Either that or we needed to reclaim previous support levels, so 800. Man, I forgot my water. Hey. Man, that pound trade is calling my name. It's just such an easy setup. It's coming right back into the supply zone. I'm not saying you got to take it and hold it all the way back down, but you could definitely, or not definitely, but it's a high probability you catch maybe 5 to 10 pips just from a bounce off of this supply zone. But we're focused on the Dow Jones today. But for all of my GU traders, keep that in your back of your mind, because that setup is on its way. Give it about 5 to 10 minutes. Keep your eyes on it. All right, so we've come back to 780. And as you can see, we had a nice little bounce. We're back into the 90s, 790. So that's a good bounce off of that level. That's what we like to see. Now we just need to make sure that that level doesn't get broken through anymore. Because the sellers still have a lot of momentum right now. I would say we need a bounce off of the 800 level, and then we need prices to break past. Excuse me, did I say 800? I meant we need a bounce off of 780. Then we need prices to break back past this breakdown candle that we just made right around 800. So that lines up with our original idea about waiting for that 800 level to be reclaimed before we go long. Until then, things are kind of shaky. But overall, things are, in the long term, things are looking good because we're at a major level of support. Now we just need to wait for a few minutes to see what the market wants to do around this level. But it's not looking good because if we look at the 5-minute chart, look at what we have. That's a bearish engulfing. We already know that means selling. So we need to flip our bias and start thinking about when we can hop into the short trade. If we even can. It looks like prices really just want to run probably back down to 750, 740-ish. Now actually touching 750 right now. So that's why whenever you see an uptrend coming into the market initially, you don't just go long and say that, oh yeah, when the market opens, it's going to continue. Because a lot of times you see a move like this where you go up all pre-market, and then when the market opens, you just sell off. I actually have a few posts on my Instagram under Ty Trade Futures called Trade of the Day. It's the series that I do where I talk about my trades. I detail this entire setup in detail. I mean like 2, 3, maybe 4 times, where you have a huge up move in the pre-market, and then when the market opens, it does the exact opposite. And that's exactly what we're looking at right now. So I'm starting to get a little bit excited because this is my setup. All we have to do is wait for the first pullback. So we already have higher exhaustion volume starting to form right here at the 935 candle. Look down here at the volume. You see this candle that pops up a little bit? Notice how it's higher than all of the candles next to it, relatively speaking, except for this one at 930. But that's the candle for the open. That should usually be the highest candle for the day. So the next highest candle will always be important. Well, not candle, but volume bar. Let me get it right. Volume bar, not candles. So that's what this volume bar right here represents. Exhaustion volume. Man, I want to short so bad right now, but I'm waiting for that pullback. Now, if it breaks the 725s and it starts moving down, we could probably see it come back to 700. If. Okay, there we go. Yeah, let me take a short at 24. Let's put our sell order right there. And then just look to take it back down to 700. We see that the momentum is there. We want to take advantage if we can get our order filled. If not, we'll delete our order and keep it moving. Let's actually try and get 28. Because sometimes when you put it at 25, you get a little bit of overshoot. Sometimes it might shoot up to 28, 30, 35-ish. You want to get the best possible price. Sometimes those 3 points can make a big difference. Now, if prices hit 700, we'll get out because that would have been our trade right there. Most of the time when you see a trade hit the first time, don't try and hold it in expectations for it to hit the second time. Just move on and keep it pushing. So our order, well, what would have been our order made it down there to 700. We didn't get to get in on that one, but it's okay. We're in rhythm with the market. We're trading in the right direction. We just have to get our order filled. And that's the thing about trends like this. When it's a runaway trend, don't get caught up in the hype and feel like you're just missing out. Market always pulls back, and it usually pulls back as soon as you think it's going to continue running. It's a psychological thing. We won't let the market just throw us around like this. We know what to expect. Patience is everything. As we click back over to the pound, we can see a little bit of resistance so far. Doesn't mean that prices can't continue going up. Because also, don't discount the fact that every candle has been green since what, 9 o'clock? So you have to wait and be patient for GU to turn around. But when it does, oh yeah, it's going down. Literally. Wow. I wonder what's making the market sell off like this. Maybe people are taking profits since it's the first week of the month, first day of the month. I think it's rare we get the first trading day of the month on the first. That's pretty interesting. Usually the first might be on like a Wednesday or a Thursday or something. So for it to be the start of the week, that's pretty interesting. Maybe that's the reason. Who knows? If you guys actually know any financial news that's come out, make sure you drop it in the chat too. Let's check the chat while we're at it. We really just need to wait for a pullback, you guys. We have to be patient. We have to. So far, we're just seeing this trend run away. That's a good thing, because when you see a downtrend that's this strong, there will be a pullback that's a little bit extreme, but it'll just set up for the next leg of the downtrend, and that's where we hop in and that's where we capitalize. But it's just a matter of being patient. Don't let the market, we don't want to let the market trick us into hopping in too early. Now we're on our way back up to 675 to retest that level. Let's see if we find resistance at the 75 or if we break back through it. The way that the trend has been moving, we'll probably keep moving down. And we haven't seen exhaustion volume on the downside. So that means that we still have room to run in this overall trend. When we see higher volume, that means that the move is over. But until then, we still have room to run. If anything, we'll probably see a move back to 700, because a lot of the times prices move back to what used to be the previous quarter level. So that would be 675. But then they move up to the next quarter levels. The Dow Jones likes to move 2 quarter levels on the pullbacks. So that's 50 points in total. So we'll see what happens when prices get back to 700. If we get a bounce from that level and we see some type of bearish price action, that'll probably be our sign to hop in. But if not, we'll let the buyers still do what they do. So far, we see the buyers kind of stepping up right here. They have a bullish engulfing. This one candle that they made completely covers the candle to the left. So, that usually leads to higher moves if prices can break past the area they're at right now, which also happens to line up with that general 75-ish level. Notice how we're at 70, 670, 675-ish. We're still playing around that general area. If I was reckless right now, I would go long. But I'm only taking calculated trades a day. That would be more of a hunch rather than something based on pure information. Because, yeah, we do have a bullish engulfing, but you have to see follow through and continuation before you go long. So that's right now. That right there is the reason I won't go long right here. Even though something in my heart is telling me, do it, do it. You have to fight those urges and think rationally. The downtrend is clearly evident, and I think this right here was a pullback to our last high. Now, it didn't come up all the way back up to 75, but it was close enough. 71, close enough for me. Now, let's look at the 5-minute. Oh, yeah. Coming off of a move like this, you'll definitely get a pullback move to the upside that makes you think that the downtrend is over before it continues. So we just have to be patient. That's all. In the moment, it will kind of seem like it's running away from you, but I promise you, we'll get our chance. It's just a matter of time. We got to be patient though. But in the meantime, we could look to take some small short trades here and there just to catch maybe 10 to 15. So we're seeing volume starting to pick up right here on the candle that we're at right now. So notice how that kind of aligns with the candle formation. We have a long tail wick, and then we have bulls starting to push the market back up and push higher. So this could be the potential start of the pullback that we were looking for. Now all we got to do is wait for the buyers, because the buyers are more than likely, the buyers are going to step in right here and do their thing, push the market higher for a good little bit, and then eventually the bullish momentum will die down and the sellers will take back over. We just have to be patient until we see that happen. Or, of course, we always want to consider both sides of the market, or the bulls just continue pushing the market higher, because remember, we are in an overall uptrend. But right now, in the moment, sellers are strong. Let's look at this on the hourly chart. So on the hourly chart, we're really just coming back to what used to be previous highs. We came back, we retested it, we bounced off of that level at 630, and now we're moving back up. We're actually 30 points higher already. We're back at 660. We're forming the doji on the 5-minute. Same scenario on the 15. But we know that the short trade is going to come back on the second leg just because of how strong this down candle was. Not saying that prices can't come all the way back up. They can. But more likely than not, that's not going to be the case. Now we're seeing a little bit of resistance back up here at 72. We're starting to form a little bit of a consolidation range. So let's go ahead and mark that up. Let's get our shapes, get our rectangle out, and let's box up this bad boy. So the top goes from 34,670 down to about, we can call it 34,645, 650-ish. That's the zone that we're in right now. If we see a break above that zone, then that means that the pullback is strong right now, and that we should definitely look to follow our plan of action that we've been established so far. We have to be patient, because this is one of my favorite setups, but the only caveat is that If you're too excited and you try and hop in too early, the market is going to crush you. And then you'll see the move that you initially knew was going to happen. It'll play out, and then you'll be even more mad. So patience, patience, patience. And then overall, if the move you were expecting doesn't work, just leave it alone. Let it go. Move on. Look for the next opportunity. And that's the plan for the day. I like what I'm seeing so far, though. I have good feelings about this trade that's coming up. Just have to be patient and let it form. Okay, it looks like we're breaking through the zone right now. Or at least we're trying to. Let's see if we can. If we get back up to the top of the zone, we could consider taking a short. Because I've seen so many occasions where prices form a consolidation. If you take the trade in the direction of the trend at the top of the zone, you have a very good chance of being successful. So if we can even get back up to that level, we'll consider taking a trade if we get a bounce when we see it. And that price is 670, 34,670. So far, the pound is seeing a little bit of a reaction at that supply zone level. Let's see if that continues like we predicted. Yeah, I like what I'm seeing on the pound. I really do. So we'll keep our eyes on this. We'll keep switching back and forth because while we're waiting for the Dow Jones to set up, the pound is moving. So we'll keep our eyes on it. But let's see what the Dow Jones has been doing. It's tried to break past that zone. It got past it a little bit, but it's right back on that level once again. So it's pushing past it, but it's not breaking past it. That's pretty interesting. We still have this looming long tail candle wick that was also made on higher exhaustion volume, which means that this could potentially represent a bottom. So whenever you see an exhaustion volume candle, take note, exhaustion volume bar, take note of what that candle that corresponds with it, what it represents in terms of prices. So you look at the low price, you look at the open, you look at the closing price. That opening price should act as support in the market temporarily. If the trend is strong enough, it'll break through and continue moving down. So let's see how prices react in this general area. And while we're at it, let's take a look at the Australian dollar. You know, this is Darren's favorite pair, one of them. That's my business partner right there. Second half of the Bison Trading Show. You guys can catch us tonight, 9:30 p.m. Eastern Standard Time over on twitch.tv/Bison Trading Show. The link is down below in the bio, so make sure you check that out. He loves trading this pair. It's actually been stuck in the head and shoulders on a daily chart for a long time. like the past 2 months. It's been crazy, really. Has. As you guys can see, that's the head, the left shoulder, and the right shoulder. But we don't want to focus on that. Let's get back to the Dow. Today, the market is testing our ability to be patient. You really just have to watch the market, observe what's going on, and wait for your setup to come to you. Don't chase the market. If we see prices come back up to the top of the zone and we see a bounce, that's our short trade right there. We're still playing around the bottom of this zone. To me, in the past, when I've seen situations like these, you pretty much coming off of an extended down move like this that started the downtrend. Typically, when prices just hover around the bottom of the zone, they have a tendency to just fall through and crash through it. And the longer it stays down there, the more likely that is to happen. So that's one idea that we can think of potentially happening. We just need prices to break past these bottom wicks. Remember, this level is going to hold up as support because it was established already as support when we had this exhaustion candle form below from earlier at 9:46. Come on, y'all know I'm on the stream right now. So we're still having trouble breaking that level. Come on, let's get back up to 670. Come on, buyers. Give us the move that we need. Like Darren always says, for every good short trade, you need the buyers to push prices up to that level that you want to take it from. You know what I'm also seeing right here? I'm seeing lower highs being established. If we follow the first touch of the zone, we come back down to the next lower high. And if this one kind of finds resistance right here at this candle that we're hovering around, that would be a double top at what used to be a lower high. Coming out of a bearish flag, consolidation zone, That could be a potential move too. So let's see if we hold up at this wick. Nope, we're coming back up to the top of the zone. There we go. That's what I like to see. All right, that's the first part of our setup. The next part is we need to see a bounce off of these levels. You don't want to just short because it gets there, because the buyers already have momentum. There's nothing to say that that momentum stops right now. All right. So now we just need some type of bearish price action. I would have liked to see a little bit higher volume, maybe indicating that buyers kind of exhausted themselves when they came into this level, but we didn't see that. We didn't see the corresponding move with the volume. So just from reading the chart from an unbiased perspective, that means that the buyers still have a little bit more room to run. At least that's what I thought. But we see as prices came into the top of the zone, they started being a lot more volatile. We see how prices are moving right now, right? You see how before they were kind of moving slow. Now you see how they're moving back up and forth so much more than they were before. That's indicating that volume is rolling into the market. It's a lot of orders rolling in. So a move is coming either to the upside or the downside. So we need to be a little bit more patient to prepare ourselves. So that was the exhaustion volume we were looking for. Remember, we were looking for that. We're having exhaustion volume towards the top of the zone. We already wicked through it, but weren't able to stay above it. Right now, we're kind of forming a doji candle, so it's hard to say that this is the time for us to short. But it seems like it should come within the next 20 minutes based on the price action that we're seeing. We just have to be patient and let the market completely form before we hop in. Now, if the buyers break past this wick at 34,680, then we definitely need to be a little bit patient. And that would indicate that more than likely we're having our big pullback that we were talking about earlier. Because remember, don't get too caught up in the consolidation zone we're in. Keep in mind how we started. Went from a high of 827 all the way down to a low of 627, a 200-point move to the downside. So the pullback, even if it's a 50% retracement, the pullback could still move 100 points to the upside. So that's why I say we have to be patient when we're looking for our short. But you know what I'm liking right here? I like the fact that both of these wicks stopped at the same point. That's bearish in itself, but we still need confirmation to think about shorting right here. We have one signal. Now, if the candle we're on now can close in the red and close within the zone, that would be another sign. And it will also could be considered a lower high. We already have our exhaustion volume towards the top of the zone. So once we start seeing it roll over, that's when we hop in. But only once we see it. We don't want to anticipate. We only want to react once it's confirmed. Because trying to anticipate it is what gets you losses. You'll take losses in the market, but try not to take the losses that you can avoid. That loss can be avoided. So it's not time to short quite yet. We've been on the 1 minute chart for a long time. We always want to make sure we keep the bigger picture in mind. So let's go ahead and flash up to the 15. We see a doji candle got formed, a little bit of a long tail candle wick, and now prices are moving up. They could come all the way back up to that 700 level and then go short from that area. Because if you notice, that 710, 700 area pretty much falls right within this general area over here to the left from about 5:30 a.m. this morning during the London session. That level has already been established and it was already resistance before. So it could definitely be resistance once again as prices start to move up into it. So keep that on the table and keep that in mind as we see prices continue to move. But let's get back down to our 1 minute chart because we're right back in the zone and we're starting to roll over. So that right there is our signal. So let's see how this candle closes. It's about to close right now, and that's where we hop in. And let's look to take it back down to the bottom of structure at 37. Now we have our stop 20 points above at actually 21 points above at 684. We hopped in at 663 for the short trade. We're looking to just take this trade back down to structure or back down to the bottom of the zone. When it gets to the bottom of the zone, we'll decide what we want to do based on the price action that we're seeing. Also, we kind of bounced off of this wick right here, so maybe that's the support level, because our zone isn't perfect. You know, it represents a general area, but let's keep our eyes on the volume. Okay, you see our stop just got moved to break even, so it's a risk-free trade. Let's move it up by 3 points, cover the commissions. Well, we're at the bottom of the zone, so we could consider taking profits, but because we haven't seen exhaustion volume quite yet, we'll just keep our stop where it is and let prices make that next move that they're signaling that they want to make towards the downside. If we get a push right back down here to the bottom of structure, we should be good. But prices are kind of moving aggressively back up to the upside. I hope we don't get our stop hit. No. Okay, so we should have took profits at the bottom of the zone, but that's okay. We still got 3 points out of it, enough to cover commissions. But you guys see how that trade set up, right? We waited until the right time. We identified our signals. We saw the tweezer top accompanied by exhaustion volume right here. Then we saw the market try and break above it, had a false breakout on the next candle right here, and then prices rolled over. We had our bearish price action, right? We had the bearish engulfing right here. Notice how it completely engulfed the candle to the left of it, this green one. So then once we saw that, we hopped in for the short. Prices came back down to the bottom of the zone. We had our order, well, our take profit at 37. It actually came to 44, but we still made 3 points out of it. And that's how you do it. And then you just look for your next opportunity. So right now we really are just stuck in the zone. So we have to refer back to the higher time frames to remember what the overall trend is. Things have changed since the last time we saw. The last time we were over here, prices were kind of breaking past the zone. They were looking very bullish, but we see the sellers starting to take back over on the higher time frames. So that means for us on the lower time frames, this is starting to set up our overall bigger move that we were looking for, because we're looking for the second leg of this down move that initially started us off up here at the open. And also, the bigger the down move is, usually it'll be a little bit more time before the next leg happens, because you got to think the market has to digest this movement that just happened. Because think about the shock factor that the market is kind of dealing with right now. During the pre-market, everything was all peaches and cream. We were up, what, 293 points? Everybody was like, yeah, it's great. And then boom, the market hits, and from 9:31 until 9:43, every candle was red. Every candle. 12 minutes of straight selling, a 200-point drop. So that kind of threw people off. Now this consolidation area is just the market digesting that information and deciding which way they want to move now. So that's what we're looking at right here, right now. Notice how the downtrend is starting to pick back up again. We started in the consolidation zone. We came up, we made a high, pushed back to the bottom of the zone, came back up one more time, made a lower high, and now we're on our way back down to the bottom of the zone once again. If you look at the line chart, we can see the lower high being established. So we're seeing a lower high coming off of what used to be, well, not what used to be, what is pretty much a bear flag. So we're starting to see the market turn around. That's what we like to see. That's what we're aiming for. Now we want to potentially look for the next lower high and then think about getting into this trade, because we want to hop in before the break, which means that we need higher prices. So maybe if we can get prices to come back to 660, somewhere around where these wicks are located, we could get what we're looking for. I'm thinking about going short right now, but I just can't short at lower prices. You always want to short from higher prices when you can. But we never want to discount the buyers. The buyers could step in right here and decide that they want to push prices higher. Because remember, the long-term trend is still up. All right. But we're dealing with a pullback right now. So it's no telling how far the pullback could go. Because based on what we're seeing on the hourly charts, we still have to lean towards a short trade right here, right now. But never discount the buyers, because one thing about the Dow Jones is that when it does reverse, it always reverses when all of the sellers are getting prepared to go short, thinking that, oh yeah, it's about to break, and then it just completely reverses. So don't discount the buyers, but at the same time, we're definitely still looking for the short trade. And that's what you have to do. You have to weigh both sides of the markets. What can the buyer see and what can the seller see? And then depending on who has the most signals, that's the side that we go with. We see what the buyers could potentially go for right now, but the sellers are strong, so that's the side that we choose. And then based on that information and that analysis that you make, then you just wait for your trade to come to you. Find the right prices, read price action. And that's what we're doing right now. We kind of see volume picking up a little bit. It's a lot higher than it was before. And if we follow that up to the candle that corresponds with it, we have another long tail wick towards the bottom of the zone. Okay, it seems like the sellers are kind of rejecting what the buyers have just done. Let's see if the buyers can hold this level up once again, or if this is going to be the break of this general area. That's why I was saying this zone wasn't perfect. But we can get the general gist of where these areas are, right? And we're still towards the bottom of that level right now. But I really think that prices are going to continue going down. Based on what we're seeing the start of what could be the next move to the downside, the second leg that we've been looking for. When you see the false breakout, the lower high that retests the top of the zone, and then the break of the zone, I think it's highly unlikely that prices get back up to the top of the zone again. That's just my opinion based on what I've seen in the markets. Anything can happen. But I like what I'm seeing right now. We just have to wait for the markets to kind of roll over. The same way we saw a rollover right here. If we see a rollover down here towards the bottom of the zone, that's our opportunity. Let's see how this candle closes. It happened quick too. See? Dang. Man. But it was too quick for us to get in anyway. But look, that's what happens when you read price action. That's crazy. So now we have a little bit of higher volume down here. So we don't want to be too excited and hop in a short right here. We can overall probably see prices come back down, test 600. So we need to be kind of calm and we need to think about where we can hop in. So where are our last lows? Our last lows are located at this wick over here at 630. So if we can get a move back up to that level, that might be where we want to take the short trade. So let's actually put an order right there at 631. Let's see if we can get that level. Actually, you know what? I don't like the momentum that prices had coming into that level. You had a long tail candle wick like this. on higher exhaustion volume, you got to be patient on that short trade. I don't want that one. And that's the thing about the last lows. If you see a lot of bullish momentum coming into it, you don't want to hop in front of that train. So what's another level that we could get in from? If this was the last lower high, then prices should not come back up and break past this point. So we need somewhere below that. So more than likely we could get 650 right here towards the bottom of our zone, or best case scenario, I like these levels right here. But it kind of looks like prices already came up and retested them right here on this test. All right, well, that was the break. We missed that one. But we can see that the downtrend is strong. We just need to be patient. I'm thinking if I can get a short trade from 625, because that's the next quarter level above, and more than likely you don't really want to take the short from the lowest prices so far that we've made. You want to let prices pull back a little bit. But notice how we're seeing even higher volume down here. It's hard for me to short off of that, because this right here represents even more exhaustion volume than what we saw before. This is the highest volume bar that we've made since the first 10 minutes when the market opened. So that's pretty significant. And we're making that on a major level at 600. That's a major whole number level. So we could see support and a little bit of demand at that level. But based on the price action we're seeing, I don't know. So that's why we kind of have to evaluate both sides. We have to respect what we see. Okay, so it looks like the buyers are trying to hold this level up so far. We see prices bouncing off of this bottom level wick, but I don't think it's going to hold up forever. It might make another consolidation zone, a mini one like we did up here. Let's see the higher time frame. Okay, so right now it's running into this no, that's not resistance. This support level, what used to be a support level at 640. So maybe it could come down to the bottom of it at 575, we can call it. That's interesting. Looks like the market is rolling over right here. Had a long tail candle wick, closed like this. If you see red following that, more than likely it's on its way back down. And that makes sense because this is a major whole number level like we were talking about at 600. But I'm still a little bit weary of this exhaustion volume that we saw. I'm wondering if the pullback could be bigger. So a little bit of bullish momentum right now, but we have to see how this candle closes. Let's see if the bulls can keep this momentum. It looks like they will. Okay, so they did. The candle closed strong for the bulls. So the pullback might not be over. Let's see where we can get in. Let's see if we can get resistance at 625 like we were thinking. The way momentum is looking, probably not. Let's go ahead and extend our zone across. Let's remember what the bottom prices are, 645. Okay, cool. $645. There we go. All right, so we can see prices probably come back up to the bottom of the zone, or best case scenario, maybe we get them to come back to the top of this overall consolidation area that we established before, and then we take the short trade. So our first area we would look for is 650 right here at the top of this wick. That kind of lines up with the bottom of the zone. And also, we don't want to discount the fact that this last low could hold up. It's broken past it a little bit, but if it breaks back down below it and stays below it, then technically this little green candle will be considered a false breakout past that last low. And right now we're getting a bearish engulfing. We'll have to see how it closes. If it can close as a bearish engulfing, that'll be our signal to go short. That's all we need. But we have to wait for the candle to close. To me, it just seems like the pullback isn't over. We still have volume increasing. Now that candle, it did not close as a bearish engulfing, but the selling kind of continued on the next candle moving down. Yeah, I think that might have been a rollover right there. It wasn't perfect though. Not like I wanted it. So we're coming back into the 600 level. So see, I would have been good if I took that trade at 625. But the way that it came up into that level, it just made me weary. But that's a lesson right there. Sometimes you just have to take your trades. If you take a loss, you take a loss. Because when we look back, everything lined up. It fit our strategy. It came back to the last low. It turned right around. So that's a lesson right there for me and for y'all. It looks like it wants to make a new low. We pulled lower. We made a lower high right here, which means that we should be leading to a lower low. Potentially maybe coming down to 575. That's our next quarter level below. We're playing around at this 600 level. Let's see if we can break below it. We just need some type of bearish price action. Once we see that, that's pretty much our signal. We also want to be wary and be aware of this potential double bottom that could form. So keep that in mind too. Let's look at the 5 minute. Tweezer bottom on the 5 minute. On the 15, we were seeing the dojis, and that's actually changed. But I'm still looking for that rollover though. I see the double bottom. I acknowledge and respect it. But I also see this downtrend that we're in. But I don't know. Let me know what you guys think in chat about this double bottom. Cause something about it is making me think about that short trade. It's not time, not quite yet. I don't think so. I just can't go short off of a double bottom. No matter how much I want to in my heart, my mind tells me, no. I can't remember the last time I shorted a double bottom and it worked. Maybe this could be the time. But I just have to stay away from that. High quality setups. That's what I'm looking for. This might be the one. Maybe so. If it is, we can definitely take notes on it, screenshot it, and save it and say this was the first one where it actually happened. Because it's looking decent. We have what could be a bearish engulfing. This candle right here is definitely past the one that it made before. We have to see how it closes. It looks like it'll be a strong close. That's why you always wait until the close, because they left a little bit of a wick right here. But I would say it's a bearish engulfing. And it broke. Okay, I like that. That's the first one. Make sure it's no exhaustion volume, because now once it's broken that last low, we know that the downtrend is definitely back on. So as long as we don't see any type of higher volume or exhaustion volume start to happen, as long as volume remains average, we can look to go ahead and get into this trade somewhere within this general area. We've broken past the 600 level. So all we do is put our order right here, anticipating a retest of those breakout prices. Let's put our order at, I like 95. Not too close to 90, but not too far away from 600. So we get prices to come back, test that area, get our order, and we'll take prices back down to the 75 level. But let's look at the higher time frames to figure out exactly where we should take our trade, because we want to get as much as we can. We don't want to cut ourselves short. Let's see. So that's 532. Can call that 525-ish. So we could hold this trade for longer depending on what we see with the price action. So 72 could be our first target, and then we could use 25 for the next one, depending on what we see for price action. But first we have to get that order filled. We're close. Okay, there we go. Order is filled. We have our stop 21 points above 616, right up here towards this last high. Looking to take it short. So far, all we did was we waited for prices to break past what used to be the bottom of the consolidation zone. We waited for prices to come back up, retest that area, and then we went short off of our last low. So while we're waiting for that trade, let's go ahead and take a look at the pound. Let's see what's been going on. Okay, so we came up into that resistance area, that supply zone. We saw prices bounce off, came back, made a double top, pushed down lower, made a lower low. And it looks like they could be on their way back up. If they come back up to the supply zone, we'll have to see what happens. Back to the Dow Jones. Let's see how this one plays out. It's a little bit of bullish momentum right now. They broke back up above 600. So let's see how far prices will go. As long as they don't break past the tops of these areas right here. This is around 611. Our stop is at 616. As long as that area is respected, the downtrend is still valid. But once it gets past that area, we could think about potentially what the up move could look like at that point, if it does. That's our stop right there. Okay, so we were definitely a little bit early on the short trade right there. Let's look at the 5-minute. Okay, so we went short coming off of an area that was a long tail candle wick. We probably would have been better off going short where our stop was, towards the top. But at the time, I didn't think it was gonna break. I thought that was it right there. That was the next leg of the down move getting started. But apparently not. Let's see. So prices came up, back down, lower high, breakout, exhaustion volume. That's what it was. So I wouldn't say it was quite exhaustion volume, but this little volume bar right here for that entire area to the left, this one was the highest one. That's one of my rules right there, to never go short into exhaustion volume, because that represents that the pullback is coming up. I just missed that one detail, and that led to the loss right there. But prices are coming back into the bottom of our zone. So that could potentially be the area that we're looking for our short trade. Because remember, the overall move starting off the session was down. We're still in the downtrend. We're just looking for levels for the downtrend to resume from, which means while the bullish retracement is happening, we have to be patient, just observe and watch the market, and then wait for our areas, wait for our prices to get hit, and then hop into the market. And if things go well enough on the bullish side, we could think about changing our sentiment. But I don't know, man. Until prices break back above 670, I still have to lean towards the bear side. So that's what I'll be looking for this session so far right now, based on what I'm seeing. Now we have a little bit of a bearish engulfing starting to form right here. You know I like that. And it's happening on higher volume. So let's see how it closes. That's always important. They turned around right here at what used to be lows, and what also used to be the lows for the consolidation area. On higher volume. Okay. It closed as a bearish engulfing, A little bit of a wick. That's kind of concerning. But we kind of saw the same thing down here. We had wicks on this candle too, and then look what happened. But we'll see. We were still looking for the short at this wick also. When we were talking about prices coming back into the zone again, this was the wick that we were identifying up here at 650. So we could still look for the short trade off of those levels. Remember, for everybody that wants to go long right now, I can't blame you. Like, I see it setting up. We have the V pattern reversal. We have the higher low bouncing off of what used to be resistance right here is now become support, and we're moving back up. So you could get, like, if you're looking to catch you could take it from 25 back up to 45. Like, you could get maybe 10, 15, 20 points out of this one. So if that's what you're looking for, then by all means do what you do. But if you're looking for the long trade, the bigger trade, not long as in direction, but long as in how big the pips you are, how big the points you'll get, I think you gotta hold out for that short trade, because we could probably see prices come back, either test the bottom of the zone or the top of the zone, and then see the next move as what we saw before when the market first opened. Now it might not be as big as this one. It might only be 100 points this time, but still, that's 100 points. So you could hold out for 10 or take 100. Do what works for your strategy, though. For me, I like to look out for the big trades, at least in situations like these. And right now, I'm just looking for prices to roll over. That's it. And we're kind of getting that right now. We had the bearish engulfing at first. Prices came back up and retested the highs up here from the consolidation zone. And now we pretty much almost had another bearish engulfing. It's not quite perfect, but it's close enough. And as we see prices kind of start to roll over, that could be our signal to go short. It also corresponds with a quarter level at 625, which also lines up with what used to be the highs from over here. So we're seeing prices, we just broke 625, we're at 620. Let's see if we can get it at 24. Because now that everything has happened, we pretty much have our order, and we just need it to get hit. Everything is all green for the go. But it looks like it's kind of running away from us right now. But we got to be patient. I've seen a lot of occasions where it comes back and it gets that order, and you just have to wait. You just got to give it time. But just in case, we'll move it to 23. Okay, we're back at 600. Coming off of a double top. That's what you like to see in a downtrend. You want to see prices retrace, make some type of bearish price action, and then boom, that leads to the next leg of the downtrend. So now that prices have moved on, we want to look for the next entry to get into. We see the next low kind of located back down here at 618. So let's go ahead and move our order. Boom, right there. Catch it at the last low when it comes back up, either there or at 613. So let's see how prices react at those levels. We're kind of hovering around 600. That's been an important level for a long time. We haven't been able to break that for a long time. Since the 10 o'clock hour has started, that's been a support level. Now, if the downtrend is going to continue, that has to break at some point. So let's keep that in mind too. Doesn't look like the buyers could maintain that momentum that they just had. If this candle closes strong in the red, that's not good for the buyers right now. Our order is close to being hit, about 9 points away. There we go, 618. Right here at that last low. We have a little bit of momentum coming into it though. Volume is picking up. It might run all the way back up to the top. That would be crazy. But understandable. Because technically this is a higher low compared to where we started from. Took another loss. I guess almost a similar situation like last time. Once again, I let my emotions get the best of me. I should have waited and been patient and at least took the short off the top. Because see, if you're going to take losses, they come. Like we said earlier, they're a part of the game. But you have to take them at the right times. If you take the short from the top right here, understandable. And then if you get stopped out, we get it. But this right here was an unnecessary loss. So that's on me. But we have to reevaluate, bounce back. We have taken 2 losses. Remember, our risk managements, I don't think we talked about it, but on the last stream we did. But if we haven't on this one, 3 trades, 3 losses in a row, you got to get out of there no matter what. capital preservation is always important. 3 for me is a good number. It could be different depending on your trading style. So you always respect whatever your number is. For me, my number is 3 with 1 away. So that means that we need to make sure that the trade that we take next is the best trade that we could potentially see on the chart. Because we want to make sure we take high quality trades like we were talking about earlier in the stream. That's still the goal. Now, I think the problem that we've identified, we have been getting in a little bit too early. So that's a patience thing. Gotta focus on that. Let's go ahead and extend the zone back across. 645. Okay, so we formed a consolidation zone after we came down. False breakout led to the down move. Then from that point, we had prices all the way move back up all the way to the top of the zone, came back down, higher low, double bottom, move back up to the top of the zone. So far we pushed up above it, broke into it. So let's see what that move leads to. So far it's looking like the sellers are trying to step back in. But if prices stay above 640 and they get back into the zone, they'll probably come back up and retest the top of the zone. So that's the lesson right there. We have to wait until prices get back to structure before we make the move. If we would have took the move right here where structure was at, our stop wouldn't have been hit, but our profit target would have been. Lesson learned. Lesson learned. We can see that so far we've been making higher lows. If this continues, we know what that means. That means that we're in a pretty strong retracement, which means that we could potentially think about the uptrend maybe starting from these levels. Let's look at the higher time frames and see exactly where we're at. So on the hourly, it's interesting what we're seeing right now. We were talking about this level from earlier when we were breaking through it like 30 minutes ago. And it broke through, right? But it broke through with a wick. But over the past maybe hour or so that the market has been open, we've seen prices kind of try to reclaim that level that they started from earlier. They want to break back above it. So how many situations have you guys seen? I know I've seen a lot where you see a level get broken through, but it only wicks through it. But when you look at the close, it actually closes at that same support level. So that might actually be what we're seeing on the hourly chart on the higher time frames. Because if we look at where prices are right now, they're at 621. This level is at the 625 general area. So we still have 12 minutes to go before this hourly candle closes. A lot can happen in that time period. So if we're able to close above that 625 level, that actually might be a bullish sign for the long-term traders. So if you start seeing bullish signs on the higher time frames, that means that we'll definitely see some good moves on the lower time frames like the 5 minute and the 1 minute that we trade off of. So we're coming back into the bottom of this trend line once again. Let's see if the test can hold up and let's stay above it, or if it's finally going to break through. You know, I still have to keep my selling bias. We have had some pretty good retracements, as we can see, and we got caught up in a lot of them. But at the end of the day, I still have to stick to the selling side. I just have to be patient and actually wait for my trades to set up. We was preaching that earlier, but we kind of moved away from it. We just need to get back to the plan that we had from our original pre-market analysis, and we'll be good. Okay, so the trend line is holding up. We had the false breakout. You guys see that? We initially broke past it. We closed below it a little bit. Made that long tail candle wick. Volume was a little bit high too. So we made that move on high volume. Well, not high volume, but good volume. But it looks like that trend line doesn't want to hold up anymore, because we had the breakout. We had the breakout, right? Then we moved all the way back up. The buyers tried to push prices higher, but the seller stepped right back in and said nope. But now we have the buyers coming right back once again, pushing prices up. It almost looks like we're in a new consolidation zone, starting from what used to be the bottom of the one from before, and the new low being 586. So we can call that what, 586, 590-ish, somewhere around there. What's going on with the pound? Short trade still setting up. It's looking good though. That supply zone is holding up. If you've been shorting off of that supply zone so far this morning, you've been doing pretty well. Had some good opportunities. It went from 41.88 down to 41.70, about 18 pips. Could have caught maybe 5 or 10. In the futures market, 5 or 10, that's not bad. So let's go ahead and mark up that bottom that we were looking at from before. So this whole time, we just been hovering around a 600 level. We tried to break past it. The lowest we came was 585. But at the end of the day, we're right back to that level once again. So that means that this level is very important. Remember where we are. It's the first trading day of the week. We're seeing the 600 level hold up. So this might be a level that we keep on our agenda and keep on our notepads in front of us all week long, especially with the non-farm payrolls number coming up. This could be pretty important. Let's see what's going on in the chat. Oh, not much today. So we're breaking past the bottom of support. Let's see how prices react around these levels. We're seeing volume starting to pick up. It picked up on the break. You guys see that? You guys see how prices came back down on higher volume, broke through the support zone. Now we're coming back up. We're retesting it. Okay, we had a very bullish close right there on that candle. Coming off of higher volume that could be potential exhaustion volume, maybe a false breakout. But let's see. Don't want to speak too soon. Came right back down to support, back at 85. It went below it a little bit. It actually came back to test that 75 quarter level, but then it came back up. So let's see if it can make a higher low on top of this support level. But remember, we're still in a downtrend. So when we see lows like this get hit, we're always looking for the potential reversal. So we always want to look for opportunities where the market can roll over. If we see that, then we can take the short trade, but only when we see it. So that's what I'm looking for. Any type of bearish price action. But remember, we're touching the bottom of a demand zone. So if a pullback was going to happen, that'll probably be the best area from it to happen from, which is why we're seeing so much bullish momentum right now. So we just have to wait for the bulls to kind of dry up, all of the buying orders get taken care of, and then the market will roll over. When we see that happen, that's our opportunity. Now the goal is to just be patient until it happens. Until then, we really just want to observe what happens. We're right back at that 600 level once again. It's like we can't get away from it. It's a magnet today. pound is moving back down. I want to put an order in over here. I'll think about it. Maybe. But we're focused on the Dow Jones today. I like to trade the pound when the move is just obvious, like boom. I had some doubt. I saw a little inverse head and shoulders over there on the 15-minute. Said, short. I don't know about that. So back to the Dow Jones we go. Still looking for prices to roll over whenever they do. Remember, we've been looking for prices to come back into supply zones. That's where the short trades have been working from today. So that's what we're waiting for right now. I would say the next kind of supply zone that we're running into is probably this up here at the next quarter level, 625. It kind of lines up with these two wicks right here. Those are the most recent highs. So let's see if prices can kind of bounce off of those. And it also lines up with the trend line once again. What once used to be a support trend line now becomes resistance. So we can potentially look for the short trades off of these supply zones. So far, we have seen a bounce though. That's a good thing. Now let's see if the sellers can continue this momentum that they had from this wick, because it did close a little off. A little bit of weakness. All right, so it looks like we're getting that rollover. So let's go ahead and hop in. All of the other times we saw the rollover, it just happened. And it went like boom. We saw it, and then like within 10 seconds, it was gone. So we want to make sure this time we follow suit. Let's see how the close is. Close is strong. Okay. Let's not take it too far. Take it back down to support. Dang. Stop got hit, man. Once again, I made the same mistake. I let the market trick me. What was I saying before, you guys? I was saying go short at structure top. Don't let the market fool you. I got fooled again, man. I should have known better, but that's the max for the day. As you guys can see, I hit my daily loss limit. I don't change that for anything, because that right there protects me. 3 losses in a row, boom, you out of there. So that's my day. Of course, whatever type of session you have, good, bad, or anything in between, you always want to make sure you keep good records. because you actually learn more from your losses than you do from your wins sometimes. I think today could definitely be one of those days. But regardless, you always want to make sure you take good records of what you have done during the day. Me personally, I like to go with the screenshots. So let's go ahead. Let me show you how to do that real quick. I use this app called Snipping Tool. If you have Windows, you should be able to open it pretty easily. If you have Mac, I think they have it too, but it might be under a different name. I just catalog it, save it in my folder. Boom. That way you can go back, you can review all of your trades. I keep records of everything, so I know what works and I know what doesn't. And then it really just comes to execution. You can put together a very good plan based on your records and then execute. I gotta go back, hop on a back testing simulator tonight. I use Trading Sim. That's my simulator. It's pretty good. They let you go back 3 years back into the past to retest whatever you want to, whatever time frame. I mean, I'm not even sponsored by them, so for me to say that, you know it's gotta be good. That's who I use. And for the most part, tonight I want to work on and focus on, like we said before, taking trades off the top of structure. When we take trades off the top of structure, it works. Right? When we don't, we see what happens. Because look at the last trade that we just took. We went short right here, right? But look at what happened. If we would have put our price back here at the top of structure, boom, we would have got hit. We would have made good points on that trade. From 616 all the way back down to 585. That's 30 points. But lessons are learned in the market. Today, I would say, was definitely a learning lesson, but in a good way. We didn't take too many losses. We took what we could. Sometimes that's what happens. But we know what we need to work on, and now we're about to put the work in. So make sure you guys tune in tonight, 9:35 p.m. Eastern Standard Time, twitch.tv/Bison Trading Show. The link is down in the bio for our live market analysis with me and Pearl Financial. We will be breaking down these markets for you guys, and I'll be giving you some updates on what I learned from my back testing session that I'll have later on this afternoon. So with that being said, man, I appreciate you guys for tuning in. June 1st, 2021. I'll see you guys tomorrow right here, same time, 9:10 a.m. Eastern Standard Time, maybe 9:15. But within that general time period, I'll see you guys then. Trade patient, follow your plan, and do it big.